What is going on, investors? Hopefully guys are doing well out there. That is right. It is Friday. It's freezing cold out here in California. And it is also time for the FAANG Stock Recap Show, where every Friday we recap all the major news and the technical chart patterns from all the major FAANG stocks, including Microsoft and Tesla. And Tim Cook and Elon Musk met this week. We had several interviews that are really posted out here on YouTube with these CEOs that were very candid. And we had a Fed-induced rally for most of these stocks. Let's kick things off like we always do with Meta Platforms. Started the week at 111, ba-boom, stock up almost 10%, finished the week at 122. This is after Meta Platforms continuing to trim costs and cut back on things as they cut back on very expensive New York City real estate as the company is scaling back their ambitions for office plans in the Big Apple. Now, these types of cutbacks, you're not necessarily going to see them in the upcoming quarter. You're probably not going to even see them in maybe Q1, Q2, but really Q3, Q4 next year, this is where a lot of these cost savings are going to show up. And I actually think part of the thesis that I've had and I've described here on the channel numerous times is the Fed was going to start to pump the brakes. And at the same time, these companies were going to start to pump the brakes and get a little bit more efficient. It's not going to show up right now in Q4. It's not going to show up in Q1. Probably going to see a little bit of it in Q2, but it's really Q3, Q4 of next year. That is why we've been in accumulation mode, because the back half of next year, I think, is going to be a little bit better than most people realize. Now, Facebook was hit with a 265 million euros. It was about $277 million fine. This is by the Irish and Ireland's data privacy regulator. This is after nearly $1 billion in fines due to scraping data from 2018 to 2019. Facebook going to have to come out of their pocket for that one. Moving on to Apple, start of the week at we'll call it 146, end of the week roughly flat, but up about 1.29% to finish the week, close to $148 per share. Bumpy week for Apple, but it forced Coinbase to stop NFT transfers on its iOS wallet app. Users of Coinbase's app would transfer these NFTs and they would do them by paying with crypto, and Apple is saying you can't do that. We need to collect 30% of that tax. And so Coinbase says you have no ability to tax a crypto transaction. And so they decided to just shut this down. This is another example of Apple. From a shareholder perspective, you love this. You love the 30% app tax, but obviously that came under fire this week from Elon Musk and others. Apple is continuing to work and increase its workload on that mixed reality headset, which is maybe expected sometimes next year, and it renamed the operating system. The operating system was internally called Reality OS, but now it is called XR/OS, which seems much more Apple-like. The features of this XR/OS is to bring like FaceTime and Zoom and other third-party apps to, my guess is like an iPhone strapped to your face. So we'll see how popular these are, and we'll certainly see the competitive advantage or the competitive edge that it might lend to Meta. Now, Apple is dropped as key analyst says that the iPhone 14 shipments could be 20 million less units than expected. This is obviously all due to that turmoil that we're seeing in China due to the virus and protests there. There's an Apple manufacturing plant of Foxconn going to be remaining in a closed loop where the employees not only show up to work there, but they end up living there, which sounds absolutely miserable. This is after cities in China continue to open up as there's pressures on local and the national government in China to relax these policies. This is obviously hurting Apple, but this is also going to pivot Apple, not immediately, but this is going to pivot Apple from relying so much on China, which should impact profits to a certain degree, but in the longer run, provide a much more larger area of safety for shareholders, in my opinion. Now, Apple's future in China is certainly up in the air as the country ends lockdown in, quote, iPhone City. We're getting just constant reports back and forth on this, but the overarching thing for investors to think about is this country, Apple just cannot rely on this country the way it does and it has over the past several decades. They need to move manufacturing out of there. Doesn't need to be 100%, but boy, they need to build up that manufacturing capability in other parts of the world because there is just too much risk for the reliance on China when it comes to Apple. Now, TSMC, which is the key chip provider for Apple and basically everybody in the entire industry, they're going to build advanced 4 nanometer chips in its new Arizona plant. We saw rumors of this a couple of weeks ago. This is good news for Apple as they are obviously relying on TSMC for the bulk of their chip, I think all of their chips, in fact. And so if they can start sourcing some of them from an Arizona plant, which is scheduled to be opened sometime in the year 2024, that would be a very, very good thing. The other thing that we'll have to keep a note on is how does this impact TSMC from a financial perspective? Will their financials still look as good as they have? And certainly, will the pricing that they allow Apple to have, will that remain as well? We'll certainly keep tabs on that. Now, Elon Musk thanked Tim Cook in a tweet with a live video of Apple's beautiful headquarters, and that was after Tim Cook took him around. Elon was very critical of not only Apple, but even Tim Cook himself for stopping advertising on Twitter, but also their response to what's going on in China as well. This is leadership, okay? Two absolutely different ways of leadership. Elon Musk is kind of like a bull in the china shop. He's a little bit of a loose cannon, but both of those things can be very, very effective from a leadership perspective. Tim Cook, obviously much more close to the vest, much more private. Now, I loved what both of these CEOs did, and this is an example. I know we can get on here and just reiterate the bear case or the negative sentiment around Elon Musk buying Twitter, but here's one of the very clear indications that Elon Musk owning Twitter got him an immediate, we're talking about an immediate invite to meet with Tim Cook personally, and it caused Tim Cook to put out this fire immediately because Elon Musk now has one of the largest fire hoses in the world when it comes to not only his own Twitter account, but owning the entire site. And so these CEOs are going to have to deal with him differently than they would in the past. And in my opinion, that is good for Elon Musk and likely Tesla in the long run. Moving on to Amazon, start of the week at 95. This one's basically flat. End of the week at about $94 per share. This is after CEO Andy Jassy had a discussion at that New York Times Deal Book Summit. If you have time to search YouTube for these interviews, Sam Bankman-Fried was at this thing. That was a train wreck, his interview. But we finally heard candid interviews with Andy Jassy, which I don't know if I've ever heard before. He talked about all different types of things, including the economy, layoffs, unions, their media business. It was very insightful and give me a little bit more confidence as this is somebody that I wasn't very familiar with, his philosophies, how he spoke. And for the most part, I thought that he understood Amazon's challenges, and it appears that they're going to be making changes over at that company to continue to drive more profits instead of just straight growth at Amazon. Now, Amazon had a Thanksgiving holiday weekend to remember as it had record sales, including many of their own brands, the Echo Dot, the Fire Stick TV, but also Apple AirPods, Hasbro toys, among other things, selling very well over the weekend for Black Friday sales. Amazon Web Services, otherwise known as AWS, is to keep adding staff and building new data centers in 2023. This flies in the face of some reports that we've been seeing come across the newswire saying that there was a hiring freeze potentially at AWS. It looks like that business unit is going to continue its regular hiring pace and those data center builds. Considering this is where all the profits for Amazon appear, that is likely a good sign for investors. Moving on to Netflix. Hello, gains. This one started at $288, up 11% to $320. And all of this has to do with the fact that investors are starting to finally price in what we've been talking about here on the channel, the changes that Netflix has been making, the new additions that they've been making to their business, the advertising business. Reed Hastings was also at that Deal Book Summit, and he talked about the fact that they're going to start a top tier gaming and invest a lot into video games. And I tell you what, here's the thing about the stock market is there's going to be a lot of people 3 months from now, 6 months from now, 12 months from now are going to start to see the results of the advertising business roll in. Maybe a good video game comes out with Netflix, and they're going to buy into the stock at that time, thinking that's going to make the stock go up. But that stuff's already going to be priced into the stock. That's why you've got, if you're going to invest in individual stocks, you watching this program and keeping up on the news is exactly what you have to do. Because if you wanted to make money on Netflix's ad business and their upcoming video game business and their kind of restructuring of their pricing plans and the shared accounts, you had to buy in before all of those results hit the tape, because it's really kind of buy the rumor and then sell the news, in my opinion, with Netflix. This stock is going to have an incredible run, but it's going to meet a resistance in price and likely come back. That is why the smart money and the well-informed money makes money in the stock market, and retail investors that kind of catch on things late don't make much at all. Again, Deal Book Summit, if you want to search those interviews here on YouTube, the one with Andy Jassy, the one with Reed Hastings, and obviously the one with Sam Bankman-Fried, definitely worth listening to. Moving on to NVIDIA, start of the week at 162. This one's just churning upwards, up another 4%, finished the week close to $169 per share. This is after augmented and virtual reality spending to reach nearly $13.8 billion. Thank you, Meta, in 2022. That would be 32% growth. Personally, I think if you believe that the metaverse and this augmented reality stuff, if this is going to be the new form, if this is going to be Web 3.0 or 4.0 or whatever 0.0 we're on when it comes to this type of stuff, I tell you what, NVIDIA is probably the company that you want to invest in. They have the GPUs that are going to power a lot of this stuff, but also they have software that's incredibly high margin as well, that's kind of layered on top of that. It's kind of a software of a service. This company very well positioned if augmented and virtual reality really take off. Moving on to Google, start of the week at 97, up about 3.5%. Finished the week close to $100 per share. This is after Google is increasing the heat on Apple for that NFL Sunday ticket package, which we thought by now would have an announcement of where that's heading for the upcoming 2023 NFL season. But those talks are lingering, and you got to hand it to the NFL by pinning Google versus Apple, two companies with the deepest pockets. We'll see where this goes. My guess is it's going to end up with either Google or Apple. Moving on to Microsoft, start of the week at 245, up a 3.8%, just chugging right along to the top of that channel. The very interesting technical segment we've got coming up here in a moment, including Microsoft ending the week at 255. This is after, always talking about Activision here when we look at Microsoft, though that stock, Activision, ticked higher amid positive Call of Duty data points. That game's got to be doing great. I don't play a lot of video games, but I got to imagine people are just binging on that. Activision also gained earlier this week. The stock, Activision's now at 75. Again, the deal, I believe, for that stock is like $95. So we still got a big delta between the acquisition price and where the stock trades today, but it has been kind of inching a little bit higher. That's after a political report earlier said that the FTC is absolutely going to challenge that acquisition from Microsoft. But David Faber of CNBC, who occasionally has probably a little bit of inside knowledge on these types of things, said that I wouldn't move so fast that maybe the FTC won't challenge that. We should get an FTC staff recommendation on the Activision sale to Microsoft. That is expected sometime probably either next week or the following week. Now, the staff recommendation doesn't always mean that's the direction that the FTC is going in. In fact, I believe that Meta case that is going to be litigated here, I believe maybe even next week, was recommended to not be litigated against, but the rather hyper-partisan leadership of the FTC decided to bring that case. So we'll see if the staff and the FTC line up on this Microsoft case. And then finally, Activision Blizzard gained on the report that Microsoft likely to offer EU, which is the European Union, they're going to offer concessions in this, including Microsoft allowing Sony to have a 10-year licensing deal with any game that Activision puts out. Moving on to Tesla, start of the week at 182. I think our thumbnail on Tesla a couple of weeks ago, 2 weeks ago, was maybe a 50% rally. Well, we got about 6.7% of it this week. We ended close to 195 on Tesla. This is after the company rolled off those beautiful semi-trucks to PepsiCo in an event that I watched last night here on YouTube, as that looks to shake up the Class 8 market. Now, this is not a large market from a unit perspective, but from a dollar perspective, in terms of how much these things cost, also, you're going going to see what was interesting about the presentation is there's going to be some technology on this semi truck that is going to apply to other Teslas, including the charging system, which looks like it will apply to the upcoming Cybertruck. We talked about this in the Apple segment, that Elon Musk got an immediate phone call and an invite from Tim Cook, thanks to primarily the fact that he blew a ton of money on Twitter. But ultimately, I think that was an interesting choice by Elon Musk and gives him quite a bit of power when it comes to these other CEOs and people having to deal with him. Tesla looks to lower their cost with their revamped Model 3 production. This is going to start in China, and it should make its way to the Fremont facility out here in California shortly thereafter. They're going to reduce the number of components and complexity of manufacturing these Model 3s, likely driving up the margins that you can potentially make. And then eventually, I think what we're going to see sometime in next year in 2023, Tesla's going to have to lower the price of these cars. Not significantly, but they're going to have to drop the price of them, as they've spent the last 2 years really just raising the price of these cars. I think they're probably going to have to drop the prices of them, but if they can make them more efficiently, those margins should stay pretty juicy for Tesla. Moving on to the technical segment of the show, and the S&P 500 has just been reacting exactly how you would thought it would. Talked about on last week's show that, hey, if you think the Fed is going to just keep raising rates, if you think things are just going to continue to get worse, you're probably going to want to sell here. If you just believe in these technical charts, you really have wanted to sold probably today. You'll probably get a shot on Monday as well, because the high probability of what's going to happen over the next probably 2 months is you're going to make a pullback on this one. And my guess is you have a pretty high probability of maybe testing 3,600 on the S&P 500, maybe make a higher low up here. There were some lows back here in June at about 3,700 on the S&P 500. That's what we're expecting from a technical pattern, and that's what technical analysis is all about. It's just recognizing the pattern and assuming that pattern stays in, because again, this black line is just showing you have these beautiful series of lower highs and really lower lows. It hasn't been as beautiful. I've seen some deviation. That's what makes me believe that if we pull back, I don't necessarily think we'll come all the way back and retest the lows that we made in October. If we do, it's great. I think it's a great dollar cost averaging. I think these might be the bottoms back in October. Whether or not it actually ends up being, we'll end up seeing. Now, the alternate reality and the alternate thing that can happen is this trend can break, and that would just be amazing if we could push up. Really, you need to get up here to 4,300, ideally even higher than that. Maybe 4,400 or somewhere in between there would be a strong deviation away from where the markets have traded over the past year. I wouldn't necessarily chase if we do break higher heading into next week and the rest of December. I wouldn't chase this, again, unless it's kind of a shorter term thing. You want to play this momentum and profit in the very shorter term. That's certainly a trade and a trader type of move to play the momentum. If you're trying to dollar cost average, don't chase this one. Wait until you're going to have a pullback. Almost 100% of the time, these things pull back and will back test this black line. More specifically, I think you probably come back a little further than that. But if we do get this break above, and not necessarily next week, my guess is you could hover right here. But if you get a break higher, kind of heading into the back half of December where everybody's like trying to go on vacation, not really worried about their stock accounts, you could have a momentum kind of melt up, break up in the S&P 500. Again, I wouldn't chase this again unless it's shorter term. Better dollar cost averaging opportunities will occur no matter what happens in the shorter term. Moving on to Meta. Oh my goodness, we have broken back up into our channel, and essentially we're back in the channel that we've been kind of trending down in for, really all year with Meta, but the momentum is absolutely in this name. It should reach some resistance. I have a black line here at about it's right where the stock is, about 125, 126. You would like to see Meta continue this move to the top of the channel. Should meet heavy resistance at about 135, 140. That's where, if you are kind of a shorter term buyer of Meta and you want to lock in some profits, I would do it if it breaks above 126. Even where it's at right now, if you want to lock in those profits, nobody's going to blame you considering the performance of this stock. Based on the momentum of where this stock is right now, look, seems like the high probability outcome that this probably adds another $10 to maybe $20 on the share price on this one. The alternative is you get rejected here at 125 and you really just kind of back test onto this purple line, maybe come back down here to about $100 per share. That certainly could be a buying opportunity if you are enjoying the story and the things going on over at Meta. Moving on to Apple, got to clean up the chart a little bit here, but not much has changed. Some big candles this week. You had big gap downs on kind of that China news, but then a big rally kind of back. But right now, I would say this purple line, I'm going to change this purple line to like a pink line so you know which one I'm talking about. So this line right now, I feel like this is the dominant trend, at least in the micro trend, where we're making a very, very steep series of lower highs on this one. There was some clear resistance right here at about 150 or so. That is appearing to be a difficult spot for Apple to get over. I would expect this stock to continue to trend downward actually in the coming days ahead. Come back down here, maybe back test 135 would be an interesting area from a dollar cost average. If you can pop up above 150, that would be a very bullish sign in my opinion for Apple, at least in the very shorter term. That would also likely coincide with probably at least a small break above the trend line that we've seen with S&P 500, as Apple is obviously a large percentage of the market. Moving on to Amazon, not much has changed. We're still in a very steep downtrend represented by these two black lines. We are in an area of consolidation that I actually think if you want to accumulate this stock, probably not the worst spot, anywhere between about $80 up to about $100 per share. You can accumulate this stock in this area, and I think longer term, you've probably got a good area. Also, shorter term, if the momentum can stay in these markets and in these names, I tell you what, Amazon could have a pretty monster rally and really still be in some semblance of a downtrend. You could have a 20-30% move, similar to like what you've seen with Meta. Moving on to Netflix, this one is just, so it was chasing these technical patterns basically perfectly, and boy, it skipped a beat. Okay, we thought maybe we'd come back down here and back test maybe close to the 270 region. Nope, it actually stopped that. We're making a series of higher highs on this one. This is about as beautiful of an uptrend as you will find in the stock market. This is also a great example of all of these other stocks, the potential that they have for the coming months and weeks and maybe quarters and maybe even years ahead. You're looking for them to make higher highs, higher lows. That's what this stock is doing. You can buy the dip in these types of situations. Just understand there is a very strong area of resistance that I think almost assuredly Netflix is going to meet. Not necessarily that we're going to pop all the way back up here to 335, which is a very short period away. I think you could come back and eventually get up there. There should be an area of resistance at that area. Also, on top of that, this stock is pricing in a lot of good results that just haven't materialized yet. So it's all going to come down to execution if Netflix is going to hold these rather large gains. Now, moving on to NVIDIA. This one, hopefully the S&P 500 starts looking like this next week, because this one was at an area where we thought we'd get rejected here, kind of top of the channel. But no, this one's looking very, very strong from a technical perspective. Doesn't want to break down, just continues to make higher lows, higher highs. The longer it stays up in this range, very, very bullish, at least in the shorter term for NVIDIA. Moving on to Google. This one's continuing to walk up. We have this purple line here. This stock just rocketing higher. It has met an area of resistance right at about $100 even. You'd like for it to continue to walk up there, maybe get up to about 105 if you're like me and you've been buying Google and you want to take kind of shorter term profits on these types of things. Anywhere between 100 and 105. I wouldn't blame anybody that bought it down here at $80, $90 per share, wanted to lock in some solid profits. Wouldn't blame anyone for that. But for Google to really get out of this downward channel that it's in, I mean, it needs to push up to like the 110, 115. So we're not out of the woods yet, but it also shows you two things. Number one, these markets could absolutely reverse and we could come back down here and retest the lows. We're not far from them. It'd be no big deal. It'd be an area where I think you continue to dollar cost average into the solid companies. But on top of that, it shows you, man, you could have a pretty solid move in some of these stocks. So again, last week we talked about how it was kind of a make or break week. We kind of made it this week, but it doesn't mean it's over. It means we can continue to make things happen with these stocks. Moving on to Microsoft. This one just continued to walk up to the top of the channel. We've got this red line up here that we're expecting this stock to likely, I mean, it's right there, okay, about 254, 255 on this stock. Now you're looking just like the S&P 500, a couple of these other stocks, NVIDIA and Netflix, can it continue to push higher? If these stocks continue to push higher into next week and really the rest of the month, that should be obviously very bullish for the stock market. This one could go another $20, even $30 higher, and you really haven't gotten over the previous set of highs. So this one can have a monster move. It also could easily get rejected at this area, come back down here, retest maybe 230. A strong momentum in these markets takes you back to the lows you made back in November, south of, we'll call it 220 on that one. I think that's an excellent buying opportunity if I say so myself. Moving on to Tesla. We talked about when this stock was down here making lows at about 160, 165. We talked about how this one could make a move from here to the top of the channel. And if it did that, that would be like a 50% rally. In fact, close to a 60% rally. Again, if it takes a little bit longer, it changes the percentage gains. But we've made a little bit of a rally on this one. I'll take this green line out of here, clean this up a little bit. We still got another, I mean, if the momentum stays in Tesla, which again, in the micro trend is there. And if you look at NVIDIA, you look at Netflix, it's certainly possible. Even Meta, it's certainly possible that these very oversold, beaten down stocks could have a tremendous rally. Looks like to me, Tesla's got another 25, 30%. That's certainly possible in the shorter term. Resistance was here at about 183. We'll call it 185. We're pretty solid over that. So any pullback to that should have some area of support. Tesla certainly looking a lot better today than it was just a week or two ago. Folks, that was the FAANG Stock Recap Show. Stay warm and stay tuned into these markets. Over the next couple of weeks, we could have some very interesting moves. Certainly some shorter term profits could be made. But on top of that, I think we're getting much more clarity from the Federal Reserve and what is going to happen into 2023. And if you're a longer term investor, you shouldn't really be thinking about next week, really even next quarter. You should be starting to think about what happens when everybody is pivoting away from the recession and really back into expansion mode. When that could occur, I think it could happen as soon as Q3 of next year. And if that's the case, you probably want to be accumulating these stocks in any kind of weakness. Hopefully, guys, enjoyed today's video. We'll be back again soon with more. Good luck with your investments.